Okay, thank you. Good afternoon, and how unusual that I'd be following a talk on political risk, and for the second time actually in the last few days. So given that's what the last discussion touched on, let me talk to you firstly about what we are doing, where we're doing it, and the perception versus the reality of what we're doing. I don't intend to talk about Egypt-wide or the future of Egypt, because that's certainly not my place to do so. But when you look at the perception versus the reality of what we are doing, we are often reported to be in a very difficult operating environment. Let me give you a few examples of what is reported versus what is reality, before we talk about what it is that we delivered last year in particular. Perception versus reality. The perception, as reported in the media, was that Egypt banned gold exports in all forms. That is incorrect. We exported gold the very next day after that headline was reported on Bloomberg and Reuters. However, we lost between 300 and 400 million market cap as a result of that reporting and the perceived reality. Another version of perception versus reality. Perception that 1,500, or reported that 1,500 Sukari workers were on hunger strike. Reality, 30 members of the mining team decided to sit down and not go to work that day, asking for more pay. Again, incorrectly reported, and again hugely damaging to investor confidence, our share price, our market cap, and what it is we were trying to deliver. The last, and probably the most damaging, was the perception created by a headline printed, "Sukari concession agreement is annulled." The reality is the judge said in that courtroom, the Sukari concession agreement is not annulled. The fallout from that led to a suspension in trading in the share price, and again a huge dent in confidence of what we are delivering in Egypt. That perception is created by poor media practice, which is immature, irresponsible and irrational, and then picked up by an analyst community that probably ink before they think and should slow down and look at what it is that we are actually doing in Egypt, which is delivering gold production year on year that meets guidance, exceeds guidance in the case of last year, where at Sukari we produced 262,000 ounces ahead of guidance of 250,000 ounces. We guided at costs of 700. We will come in under 700 when we finish auditing those costs. And we broke the back of expenditure on a very large expansion program, which we set out to double production from the 5 million tonne per annum throughput to 10 million tonnes per annum by spending $287 million over the last few years, of which this year we only have about $100 million left to spend, and we will deliver that expansion this year, despite the perceived political risk and difficult operating environment. The company operates the Sukari project. We have done so since 1995. The Sukari project is currently a 15 million ounce resource, a 10 million ounce reserve. It's still growing, and we exited last year with more cash than we entered the year. We're debt-free, hedge-free, and have over $200 million on the balance sheet. Reality versus perception, I spoke about already. I thought I'd deal with it up front, given it's probably the most pressing issue when looking from the outside in at this company. Excuse me. So in terms of what we have been delivering, we're now entering our 4th year of production. We set this company up to fund expansion from cash flow, and that is what we've done from the last 3 years of production, and it has been ramping up as planned. 150,000 ounces in 2010, 200 in 2011, 262, 263 last year. This year we should deliver production in excess of 300,000 ounces. We complete the expansion project and we move to what we look to see a 450 to 500,000 ounce production profile at Sukari for the next 20 years. A very significant asset, and an asset that continues to perform year on year. I talk about where we have been and how we set the company up. We are emerging from the investment phase, with last year being the very last of our heavy capital intensive years. This year, still not insignificant, but as a percentage of cash flow that we generate, not as extreme as last year, where pretty much all of cash flows that were generated were reinvested in the expansion program. This year we'll look to reinvest about $150 million of the expected free cash flow from operations of in excess of $300 million. After that, the company becomes hugely cash generative for a long period of time. We do invest our capital, we think, wisely. We have been very focused on where we spend money, how we spend money, and we also look at how we sit amongst our peer groups or peer group, recognising that we're not just a miner, we are operating a business here, and that business should make good returns. And when we are making those returns and not reinvesting in the project, those returns should start going to our stakeholders, which are government and shareholders, and those stakeholders should start to see a very good return from this year onwards. Growth and growth strategy is fully financed. We fully equity funded this project from 1995 through to today, or through to the start of production. When production came in, that allowed us to keep going with stages 2, 3 and 4, where we're just completing stage 4 this year. Highly cash generative, as I said, cash balanced in excess of $200 million and debt and hedge free. We will continue to move on that growth strategy, and that strategy is on three fronts. Growth at Sukari. We talk about ramping up to 450 to 500,000 ounces per annum, and we are well down that path with stage 4 coming to completion this year. We haven't lost our focus on the fact that we were an explorer, we came through to development, and we need to stick to that philosophy that we can explore, develop and then produce. At Sukari, we have grown that resource from its initial 1.3 million ounce resource when we first presented here in 2000 to over 15 million ounces today. But that has not finished at Sukari, where we will continue both regionally and below the Sukari Hill from the underground to increase both those resources and reserves. The third part of that strategy is to grow in the Arabian-Nubian Shield, which we see as highly prospective yet underexplored. We see the opportunity to create a big footprint within that shield and continue to build away from Sukari as well. Stage 4 I mentioned already, and is a very big capex project and takes the project from 5 million tonnes to 10 million tonnes per annum, and is probably the last big capex component at the Sukari project. When we talk about growth at Sukari, the real future for this deposit is from the drilling from underground, where we believe we have only just begun to test the extent of this high-grade part of the Sukari deposit. As we move towards the centre of this slide, or the centre of the hill with the decline that is advancing at the moment, we will continue to drill along the way, and this is what will push Sukari from where it has come, 1 million ounces, moving into that 1 to 5, 5 to 10, 10 to 15, and now going from 15 to 20 million ounces and becoming one of the more significant gold discoveries on the African continent. Underground development. Underground, we went underground very early, and we went underground probably without as much information as you would traditionally go underground. But the underground has become, from a very important part of the project, after an initial capital commitment of $20 million. Some of the months through last year we saw the underground contribute up to half of the production from Sukari, and has represented a very important part of what we do day to day at Sukari. We see that we will be spending $15 to $20 million again this year and probably next year in continuing the development below what is going to be a very significant pit. In this slide, that pit picks up almost 10 million ounces. Further exploration of Sukari and the Sukari tenement area of 160 square kilometres is ongoing, and whilst we have been there a long time, we have not done it justice away from the Sukari hill. It's quite difficult to move away from something that continues to grow year on year by 1 million ounces. It is fair to say that in the last year we managed to shift that focus a little, and we've had success moving away from the hill, finding mineralisation that will at some point come to this Sukari plant. Growth beyond Sukari. Our main focus at the moment is growing in Ethiopia. We began in the north of Ethiopia a couple of years ago through a small acquisition of land where we have started drilling last year. For us, we want to build that momentum, take things again from exploration, development, through to production in the same way, but possibly quicker than we did at Sukari. We'd like to use the same development team and continue the development in an area which we see again as very underexplored, and certainly with only one operating gold mine in Ethiopia, we would see the future as being fairly bright and a future that we should play a part in. Strong growth pipeline. This year, growth comes from accessing the higher grades in the open pit and the underground, and that primarily drives the production growth from last year's 262 to being in excess of 300,000 ounces this year. We deliver stage 4 in the latter part of this year, but that is what drives the growth next year into that 450 to 500 bracket. Beyond that, it's the development of the advanced exploration projects that we're after in this area that will see medium and long-term growth continue at Sukari. So just in summary, we look at where we are as being debt-free, hedge-free, and with a strong cash balance and strong operating team as a good way to manage those perceived political risks in an area that may not be flavour of the month, the investor flavour of the month. For us, we're very happy with the business we operate, how we operate it, and the returns that we should be delivering to shareholders and equity holders and stakeholders, being the government, starting this year. With that, I thank you for your attention and pass it back to Paul.